Hello and welcome to the day ahead. It is Friday, March 4th. I'm Andrew Gagan. Well, a mixed session for global share markets as investors continue to react to the daily news cycle out of Ukraine. Fresh reports this morning. Ukraine and Russia have agreed to a temporary ceasefire in some areas to allow for civilian evacuation. This as the leaders of the Quad, Australia, the US, India and Japan, agreed that such unilateral changes to the status quo with force should not be allowed in the Indo-Pacific region. India is yet to condemn Russia's actions. It comes amid increased concerns over Taiwan, wary of China taking advantage of a distracted West to move against it. Stinging sanctions from the West continue to ramp up, with the United States senators introducing a ban on Russian energy imports. In response, crude futures came off the boil to close down nearly 3%, back below the $110 a barrel level. The White House slapping even more sanctions on the Kremlin, now targeting a raft of individuals close to President Putin. Wall Street struggled to find direction, ending in the red as the war in Ukraine continues to stir uncertainty. Growth stocks, including Tesla and Amazon, leading those losses. Well, getting to the bigger picture, and stateside challenger jobs cuts fell in February, with the ISM services PMI showing some weakness but remained well above the 50 level of expansion. Jobless claims also taking a dip, down by 18,000 for the month. Meanwhile, day two of Fed Chair Jerome Powell's testimony on the Hill wrapped up, with the head reiterating the central bank will use all its tools to bring inflation down, adding again he thinks it's appropriate for the Fed to continue down the path of policy that was outlined before the invasion of Ukraine.
I do think that it's going to be appropriate for us to continue to proceed along the lines that we had in mind before the Ukraine invasion happened, and that was to raise interest rates at the March meeting and to continue through the course of the year based on incoming data and the evolving outlook to engage in a series of rates. I would say in this very sensitive time at the moment, I think it's appropriate for us to be careful in the way we conduct policy simply because things are so uncertain and we don't want to add to that uncertainty, but that's where it leaves me.
Treasuries were mixed. The US 10-year yield down by 1 point, while the 2-year rose by 3 basis points to near 1.54%. Currencies also mixed, with the euro down from recent highs, while the Aussie unit spiked to 73.2 US. And on the crypto market, Bitcoin is off around 4%, holding just above the $42,000 US level, with analysts contemplating if the leading cryptocurrency is now showing signs of maturity and becoming an inflation hedge. Well, locally, SPY futures are currently off around 1%. In fact, 0.8%. They're indicating the share market's 5-day winning streak will come to an end today. Iron ore again the play of the day, futures spiking some 10% yesterday, buoyed by growing hopes of improved demand for the commodity in China. This after reports that Beijing could ease some COVID curbs. Iron ore was currently up 5.5% at $153 a tonne. And base metal prices rising by as much as 4.3% on Thursday, led by nickel, with aluminium reaching a fresh record. The gold futures price up 0.7% to $1,935 an ounce. Ahead locally today, retail trade data for January, while tonight in the US, non-farm payrolls data is released, with the Fed weighing up the strength of the jobs market with the crisis in Europe ahead of its meeting this month. And that is the day ahead. See you again Monday.